Owning a home has become a big part of the American dream. Homeownership gives families a sense of stability and security that renting can't. But how much home can you really afford? And what type of monthly expenses can you expect when purchasing a home compared to renting? I'll review the cost of homeownership coming up next. Over the last 25 years, home prices have increased by a total of 170% for an average of 4.1% per year. Household income, on the other hand, has only increased by 18.8% or 0.7% per year. It's an understatement to say that income is not keeping up with home prices, making it more and more difficult every year for families to purchase a home. This issue brings into focus a challenge for you in deciding if you can or cannot afford to purchase a home. So what size home can you afford? Financial planning theory states that you should never spend more than 30% of your gross salary on housing. With median household income at just over $60,000 in the United States, that means the average family can spend about $1,500 a month on housing. Translated to a mortgage, that's about $300,000, or a purchase price of $375,000, assuming you put a 20% down payment. Now, the correct number for your family may not be 30%. You need to decide for yourself what the correct number is. You can base your monthly number on your current housing expense. If you're already paying $1,500 a rent and it's comfortable, you should be fine. If you're looking to increase the monthly amount of your expense, you need to create a family budget by adding up all of your income and subtracting your expenses, which should tell you how much you can commit. Once you have a monthly number that you're comfortable with, remember, buying a home is not like renting. There are a lot of monthly expenses that you'll incur that you've never worried about before. If your commitment number is $1,500, you may not be able to afford a $300,000 mortgage. Here are some of the major expenses to consider, which you need to account for in your final budget. Traditionally, home buyers have put a 20% down payment when purchasing a home. Some mortgage lenders, though, allow you to purchase a home for a lot less down payment, as low as 5 or 10%. But if you choose to do this, you will need to pay an extra monthly expense called PMI over and above your normal monthly payment. The amount of your PMI is based on the size of your mortgage, the interest rate, and your credit score. In this example, PMI would add an additional $148 to your monthly payment. Property taxes are assessed based on the value of your property and vary by state. New Jersey has the highest rate in the nation at 2.31% of assessed value, which would be $640 a month for a $334,000 property. Nationwide, the average tax bill is $248 a month. If you have a mortgage, you will need to maintain a homeowner's insurance policy, covering the risk of damage to the home. The rate that you pay is based on the risk of loss in your area, with Florida being the most expensive. Insurance companies also look at your age, the building materials of your home's value, your claims history, and your credit score. The national average cost for a $300,000 policy is $153 a month. Damage to your home caused by water that originates from a natural disaster such as a flood, tsunami, or hurricane is not covered by your normal homeowner's insurance. If you live in an area that is prone to these types of events, it is a good idea to purchase flood insurance. Costs vary based on the location of your home and the area's risk of flooding, but the national average is $59 a month. If you're looking to purchase a townhouse or a condo, you will most likely be incurring HOA fees or homeowners association fees. These fees generally cover the costs of common areas such as driveways, pools and recreation areas, and the building's exterior. Nationwide, the average is $300 a month. Many homebuyers won't even consider living in condos because of HOA fees, but they are not as bad as you think. With many associations, because you're living in common buildings, the homeowners and flood insurance is included in the HOA fee. Water, sewer, and garbage fees are also generally included, cutting down your potential utility expense. One of the risks of purchasing a home is the possibility of costs associated with things going wrong. Costs could be as simple as needing to hire someone to take care of the yard, to tens of thousands of dollars to repair the plumbing or fix the roof. I suggest budgeting at least $100 a month and setting that aside in an emergency fund, but this is purely optional. So how much can you afford? Add up all of those estimated costs, and now you have a much better idea of what it takes to own a home. I've seen many home buyers lose their dream because they made purchase decisions based on the original mortgage estimate, not realizing how many additional bills they were going to end up having. A good realtor will have a feel for the costs in your area, so use their expertise to your advantage. For more financial insights, please subscribe to my channel. I'll be releasing new videos every week covering financial planning, investing, insurance, and tax concepts. You can also visit my blog at smartzonefinance.com for articles and infographics on some of life's most important financial questions. If you have any specific financial questions you would like to see answered in the form of an animated video, feel free to leave a comment below.